you're getting into real estate and you don't have a silver spoon. You're not going to be able to go out and buy a property cash. How do you acquire it? Our first investment property, we didn't know much. We were very green on that side. We didn't know about off market properties either, or getting one from a wholesaler. But our first property, we got just a regular commercial loan from a local bank. It was a 15 or 20-year AM at just over prime and 20% down. Not a bad deal, but it cash flowed zero since we bought it at ARV. It was ironically a $100,000 house. I think we paid 101, and it rented for $1,000 a month. Well, we put in 20 grand, and a few years later, we got money out of it when we sold it, but only because of appreciation. And while we had it, while we owned it, we never cash flowed anything. There was a little bit every month that wasn't attributed to taxes and insurance and whatnot, but the few repairs that came from it, there was no other cash flow. So commercial lending, just with a local bank, one way. A lot of folks will get a mortgage in their name instead of a commercial loan. Gets them the 30-year AM, lower interest rate. There's obviously details that have to go into account. You can have up to 10 of them. Hard money lender. Hard money lenders are, I'm going to catch shit for this, but they're kind of like loan sharks. So they're more private. They're private entities or people who are doing it not just on the side, but doing it to generate revenue. They may have backing by a bank. They may have a credit line that they're using with the bank, and then they're just arbitraging, making the difference between what they're paying in interest and what they're charging. Or they may have cash reserves and they're just letting their money work for them. But a hard money lender is going to charge a lot higher interest than a bank. They may have some benefits like fund all the rehab or 100% purchase price or things like that. Be more willing to work with you on things. They generally aren't going to pull your credit. They're looking at the asset, and it's a short-term loan. It's like a 6-month, 9-month, 12-month loan. I think right now, this varies by time, obviously, with interest rates higher now the last year. Things have gone up, but no one person that's charging 14% and 4 points. So it's a $100,000 loan. The 4 points is $4,000, and then 14% interest annualized on that loan. That 4 points may be due at closing. That may be something that they front load. They may have it on the tail end. They may just put it onto the account right now and you accrue interest on it. And there's lots of different ways to do that. But hard money lenders are quicker to be able to get approved. They're quicker to fund. They're quicker to close, but there is a cost for them. Private lenders. Private lenders are people you encounter, you work with, you talk to, they know, like, and trust you, and they have funds. It may be personal, it may be out their IRA or something else, and they are looking for a way to invest in real estate without having as much day to day. They don't want to be involved in it. They don't want to be involved in flips. They don't want to hold the real estate, and they're not going to charge what a hard money lender would. They'll charge something that's a lot more reasonable, just to grow their retirement account or whatever account they have or whatever funds they have. Those are more long-term relationships you can use to help buy a property, get it rehabbed, get it rented, get a renter in there, and then refinance out, and then turn and use their money again. They'll charge. Every agreement's different. I don't want to say rates or points. Everybody's different on what they're looking for, but they're generally a lot lower than a hard money lender. There's also DSCR lenders. DSCR lenders generally are nationwide or very regional, very large areas, not just local. And they're looking at the DSCR, the debt service coverage ratio. And they're looking at the asset. They'll look at your viability as a borrower as well, but they're not looking for W-2 income, basically. And they're evaluating the deal, and they'll offer bridge loans, which is like a 6, 9, 12-month loan to be able to rehab the property. And then you refi out with another, with a long-term company with a long-term loan, or a lot of them, you can just move it over to a long-term loan with them. They generally offer longer AMs than a bank would. Rates are generally higher, depending on your region, a little bit higher than private lenders or local lenders like small community banks. But a lot of times they'll do higher AM schedules. They'll do 30-year AMs, or work with you on going up to 90% LTV or 80% LTVs. Give you some flexibility there. Then you've got your small banks, your very local community banks that have, just a few branches, and they want to keep their money in their community. They have a portion, they're not going to have the whole portfolio, they can't. But they'll have a small portion that they like to invest in real estate. They like to have notes in real estate. They're going to be somewhere in the middle in all this. If you have a great relationship with them, they can be very easy to work with, make it very convenient, very non-stressful. But of course, they're having to look at you and the property itself, and they're going to want a personal guarantee. Most of these are going to want a personal guarantee as well. It doesn't matter if you have an LLC, they'll still want a personal guarantee on the loan. We have used all of these at one point or another. Which one is best depends on what you're needing at that time, what your goal is, what you're needing at the time, and what options you have. You can also have a great lender that has great rates. They're super easy. They check all the boxes. That doesn't mean they have infinite funds. You may have a combination. We have private lenders that we use. We've used some DSCRs. We use a number of local banks. It really varies. So lots of different ways to fund your first or 100th or 200th property.